Good morning, Oracles. Well, yesterday wasn't a great day for Tesla, down 0.5%, but it did outperform the entire market. That was great to see. We've got CPI data coming out today. By the time this video drops, you will most likely already know the numbers because I usually put the video out at 8:30, which is the time that we are going to be getting the CPI data. So we had a little sell-off into the end of the day yesterday in anticipation of a high number, could potentially hit 9%. That's what a lot of people are fearing. Heck, we are still high regardless. Even if we came in at 8%, that's still high, even though we would be beating expectations by 0.8%. So let's see where we fall. Don't know how the day is going to trade. It's just kind of totally up in the air. These are just really high, silly numbers, but some good information to check out for what we saw for Tesla yesterday. Despite the fact that we had the sell-off at the end of the day, Tesla still held up near $700. It did close under 700, but we did fill that gap at 695 over the course of the day and then closed above that 695 gap. So currently, there is no gap, unless we gap up today because of CPI data. So the 695 gap is filled, and if we do end up gapping up, that is still a higher gap than we had before. We'll see how we trade today based on that information, but we also had other good information with oil prices coming down and closing securely under $100. This is a great sign to see oil continuing to come down. And if oil prices continue to come down, that could lead to a lower inflation number in the future. So this is a good sign that we're moving in the right direction. It's slow, but we're making progress in the right direction. So other numbers that we have seen coming out are analyst expectations. And analyst expectations, we've already seen many price targets getting dropped little by little. We are seeing analyst consensus EPS estimates getting dropped little by little. So this is what we're anticipating going into an earnings recession. We see this across many companies. Now for Tesla in particular, it's mostly based on the Q2 numbers because Shanghai was shut down. So we're seeing that reflecting in Q2 itself. But when it comes to price targets, those are coming down mostly based on macro environment numbers. And again, that's just to be expected. We talked about it on last night's video about how the Fed is running off its balance sheet. They're basically taking money out of circulation, so there's less money out there to be invested. So the money's got to come from somewhere, and the stock market just happens to be one of the places that it comes out of. So it's natural to see everything pulling down the way it is. So to see Tesla holding up at that 700 mark yesterday was a very strong signal. Now again, we have to watch as we trade down. Let's see how we trade today after CPI and then going into Q2 earnings season, because if the entire market pulls down even further, then we might actually see the stock market pull down further. We saw this in June 1st when the Fed did start running off its balance sheet. The market pulled back significantly, and the Fed is going to be increasing that come September 1st. So we might see another pullback just based upon that because there's going to be less money in the economy to invest. But again, the numbers I'm paying attention to are that 695 level because that was the lowest gap that we had before. Underneath that is 650 and then 620. So those are the numbers because we have been making higher lows all along the way. Now we just need to make sure that those hold up going through what seems to be pretty tough times ahead of us. And we will truly get to see if all of these things are priced in or not. So again, we had other breaking news that came out yesterday when it comes to Twitter. Twitter did officially file the lawsuit against Elon Musk, asking him to hold up his end of the bargain when it came to the buyout. So we'll see how this plays out. I don't know because obviously Elon's argument about this whole entire situation is, well, the material information that Twitter provided was incorrect. Based upon that, he shouldn't be forced into buying the company because they falsified that information. So we'll see how this goes. And if Twitter has to put that information forth, are they going to be able to come up with it and justify it? Or are they going to settle this outside of, going to actual court and a ruling? Again, this all has to play out, but now this is going to still continue to be an overhang on Tesla itself. So still drama, still going through this. We'll sit back and just kind of see how it plays out. But unfortunately, it hasn't fully played itself out in the long run. Now, what could end up happening is Elon sells off his Twitter shares and then pays the $1 billion to get out of the whole entire deal, and then we're good to go. Don't know if that's what's going to transpire. Again, we're waiting to see any Form 4 filings coming out of Elon when it comes to him selling his shares of Twitter. And that would answer the question as to whether Elon is truly backing out of the deal or if he's just looking at this as a bargaining chip. Don't know. Other news that we got out was Rivian is also laying off 5% of its non-production staff. So that's pretty significant, but Elon had said it in one of his interviews saying that Rivian really needs to do that. Their expenses are way too high. They need to make a massive cut, and they're doing so. And when it comes to Rivian, any EV company truly, in order to get the EV revolution moving in the direction we want it to be going, all of these companies need to be succeeding. And it's not like they need to succeed in order for it to happen. Obviously, Tesla has started that wave going forward. So if companies do falter, somebody's going to be there to scoop it up. It seems like everything truly is moving in that direction. I'm hearing a lot of commercials from Eversource in my area talking about EVs and how to get EV credits and tax breaks by having solar to charge your EVs. Everything in the country and the world are moving in this direction. So it's nice to see other companies being able to pick this up, because the more companies who do push this forward and succeed, the faster this transition will happen. And when I look at the stock price and the macro environment and everything pulling back just because that's the direction that the stock price and the stock market are heading, I take a step back and realize that where are the fundamentals and where is the company truly going? And honestly, we may not be moving anywhere, but there's a lot of steam building up in this train. So that's where I look at the fundamentals. The fundamentals continue to grow with the company, and because the fundamentals continue to grow with the company, I understand that when we come out of this PE compression bear market environment, we will come out strong. That's why paying attention to the fundamentals is so important. When you see all of the companies out there and the entire world starting to move towards EVs, when you see a lot of companies moving towards renewable energy, and you look at the stock price being suppressed, that stock price in this environment is reflecting the fundamentals. But when that environment changes to a bull environment, that's when the stock price can really take off and flourish. We are just not there yet, which is why I had mentioned yesterday, I like buying at this time, because buying when nobody else wants to buy is so important, because when you buy when everybody else is buying and you've already doubled the stock price, that's when everybody's like, ooh, look at Tesla's been on a run. This is awesome. Now I want to get in. They get that FOMO. I don't want to buy when there's FOMO. I'm still going to dollar cost average every day like I do, but I don't want to be adding extra when everybody else has the euphoric FOMO. I want to buy when everybody else is like, well, I don't want it. I'll sell my shares. I'll be like, I will buy those. Thank you. That's how I operate, and that's why fortunes get born during these times, because those who are buying when others are fearful are going to make more money in the long run. And it's not like during these times we have any fear of Tesla going bankrupt of any sort. They have a giant stockpile of cash, huge cash flow generation coming in, amazing pricing power, and demand that goes for at least another year, if not longer, when it comes to just the models they have now, and then 3 to 4 years worth of demand for the Cybertruck when they start producing that. So no questions whatsoever about any issues with the company going forward and their strength. So obviously we will get updated numbers on the 20th when it comes to their earnings to see how much cash they do still have on their balance sheet, to see how much cash flow generation they still have coming in, how much money they have burned when it comes to the Berlin and Austin ramps. So we'll get a lot of updated information there, but it's not like they're going bankrupt. That's not going to be happening. So we can see the strength of the company during very difficult times, and when we get to the good times, they're going to be doing so much better. And so yes, when it comes down to it, I am still adding every single day to Tesla, despite the fact that I don't think we are going to see a full market turnaround for at least another year, and I keep my stockpile of cash to add more as we dip more. And now I'm definitely not just dumping all of my money in. I know many of you are all in. That's awesome. You guys have high conviction of the future going forward. No problems with that whatsoever. I just am more comfortable with my strategy because I do like to be active. It's a little ADHD thing when it comes to the stock market. I want to see, constant movement every single day. And by adding money every single day, I can be active in part of that. So that's just the way I do it. And that works well for me and the way I operate. So So again, I'm just not dumping it all in either because nobody knows where the future's going. And if we pull it back further, then I'm going to lower my dollar cost average even more. I was having a discussion with Bruno in the comments where, and he made a good point. I've been seeing us trading between 620 and 770. We've been in this for about 2 months now. So he's like, well, why don't you just wait till the bottom with the swings and add in at that point? Makes good sense. But what if we don't swing down that far anymore? We have been making higher lows along the way. So despite the fact that we did come down to 620 a couple of times, we've then hit 650 and bounced off. We've then hit 695 and bounced off. So we might not be making lower lows again. So maybe I won't be able to get that opportunity. So either way, because of that window of trading that we were in and the fact that I add every day, sure, my cost basis isn't down at 620 where it could have been, but it's also not at 770. Right now, my cost basis for that time frame window is probably around 690 to 695, which is right around where we are at right now. So yes, because I'm dollar cost averaging the way I do, I most likely will not hit the bottom, but I will also not be near the top. I will have a lower cost basis than most people because of the dollar cost averaging I do. So let's see how today plays out. We have talked about it before. We're kind of in a range, and let's see if the macro range shifts based off of today's CPI data, because if that macro range shifts, Tesla will most likely shift along with it. But again, when we're watching that whole entire shift happen, is Tesla's range staying higher than where the macro fell? So if the entire macro pulls down 5%, is Tesla's range pulling down 5%, or is the range outperforming the macro range? Those are things that I'm paying attention to because that tells me trends and what companies are going to be the strongest. And Tesla has been proving to be one of the strongest companies, despite the fact that we're in the deep red for the year. And year over year, we're almost exactly flat when it comes to the stock price. So again, these are things that you can't anticipate. You don't know what the future is going to bring, because last year at that point we were at, $695, and then the stock ran up to over $1,200, and then we pulled back down to $695. Totally different environments that we are in. And again, it's not just Tesla that has pulled down this far. It is the entire market that has moved in this direction. So we're going to get through CPI today. We are then going to have PPI tomorrow, and then earnings we have next Wednesday. How do you think we are going to be trading over the next week after CPI and PPI and then going into earnings? Let me know your thoughts in the comments to see if maybe we sell off and we're going to run into earnings. Do you think we're going to sell off before earnings? Again, for me, earnings is usually a coin flip. I don't like to play them, but I'd love to hear your thoughts in the comments. Thank you all so much for watching. I appreciate all of your support and feedback. If you have not subscribed, please do so down below. Sign yourself up for notifications. I am over on Twitter at OracleTim1. I share all of the latest Tesla news, pertinent stock market information, and all of my daily trades. We do have a Discord chat. That link is down in the description. And if you'd like to support the channel any further, we do have a Patreon. That link is also in the description. Thank you so much. Have a great one.